Ladies and gentlemen, welcome to the monthly review of China's carbon trading market. This is International School of Low Carbon Studies in Shandong University of Finance and Economics. I'm Jingmin Wang, the host of this program. From this day forwards, we will show the international community the monthly progress of China's carbon trading market by videos. As you may know, on July the 16th, China officially launched its nationwide carbon emission trading market. Carbon emissions by more than 2,000 power companies involved in the first trading group are estimated to exceed 4 billion tons per year. Carbon emitters from other sectors such as steel, papermaking, and aviation will be added gradually. Even though now it already covers 40% of China's total emissions and close to 15% of global total emission, making this market the world's largest in terms of the amount of greenhouse gas emissions covered. It is more importantly that it sends a clear signal that the Chinese government is serious in realizing its goals of peaking carbon dioxide emissions by 2030 and achieving carbon neutrality by 2060. Now, let's take a look at the first month of this world's largest carbon trading market. Based on the daily observation, we may draw at least 3 points of view. First, the carbon price rose by 3.25% in the first month, and the form of carbon price firm, but the carbon credit trading volume continued to shrink, became the main feature of the market. The overall trading heat gradually cooled down. Since the first day of online transaction, the daily amplitude of carbon price increases, as shown in this figure. There are great differences between buyers and sellers in the reasonable price of carbon credit. Because the current national carbon trading market in China is still in its infancy and the price mechanism of carbon credit has not yet been constructed, therefore the price fluctuation is only the result of the volume price game between long and short size. Based on the technical analysis, the carbon price K line is the box vibration as a whole. The upper shadow of K line appears high frequency and has a long line in the month, and the long position pulls up several times and then fall back, as shown in this figure. It shows that there is a strong upward pressure on carbon price. However, the number of positive lines in the carbon market is more than negative lines, and the market as a whole temporarily shows a bull market. Second, in terms of market volume, the carbon price trend is not optimistic in the short term. At the initial stage of the carbon market launch, incremental funds continue to enter the market. Carbon price and carbon rise continue to rise under the support of high volume. The rising price explored the operating costs of enterprises and disclosed the real cost information of enterprises to the government. However, after that, the trading volume gradually decreased and the form of carbon price firm, but carbon credit trading volume continued to shrink, became the main feature of the later carbon market. The situation that trading volume shrinks, price rises, and the price decreases while the trading volume increases frequently appeared. Market trading activity continued to decline, and traders' trading sentiment remained low. Therefore, the effective information covered by carbon price decreased and market effectiveness also declined periodically. The reason is that the buyers hold a wait-and-see attitude. Some enterprises have not yet opened an account or even opened an account, but still have expectations of price downturn and speculative psychology. However, the sellers is still reluctant to sell under sufficient quota due to the expectations of the reform of carbon quota mechanism. Under the resonance of these two factors, the market turnover continues to shrink, and its marginal role decreases simultaneously. Based on this, due to lack of the support from trading volume, there is price risk in every substantial increase in carbon prices. Market traders should pay attention to the risk signal released by the form of price and volume interweaving. Finally, based on the medium and the long-term perspective, there is still much room for carbon prices to rise. At present, the carbon price fluctuates continuously from 51 yuan per ton to 59 yuan per ton. However, the current reform processes and transformation speed of power industry show that the marginal added value of carbon price to enterprise cost is low, and it only works for the incremental part of carbon credit. There may still be a high room for price rise in the future. Well, this is what we want to share with you about the launch of the world's largest carbon trading market for the first month. We believe that it will take time for the ETS to have a direct impact on the country's emissions, and we should also keep a clear understanding of ETS at all times. In other words, the purpose of the carbon trading market is not to trade, but to reduce emissions. In the end, I would like to thank our analysts, Professor Peng Hongfeng and his master student Ma Shiqun, who put great effort on our daily review, weekly review, and this month review of China's carbon trading market. If you are interested in our daily and weekly reviews, although these are all written in Chinese, please scan this QR code on the screen and follow our school's WeChat official account. You may find the daily updated news there. Thank you for watching. See you next month. Bye-bye.